Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Nina Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Nina Mishra. My guest today is John Ciampaglia, CEO of Sprott Asset Management. We're talking about nuclear energy, uranium, and other energy transition materials. John, welcome back. Great to have you on the show.
Yeah, thank you for having me back. Look forward to our discussion.
Yes. So I wanted to start with uranium because uranium prices have surged to their highest levels in 12 years. And your uranium miners ETF, we'll talk a little bit about that ETF later. But this ETF is up almost 45% this year. So please tell us what is going on with uranium and its prices.
Yeah, well, uranium has been, I guess, the market darling this year. And it's a topic we've been talking to investors about for the last 2.5 years. So we've been very bullish on uranium for a number of years, and it's really playing out this year in particular. A lot of investors have been reaching out to us saying, hey, what is going on here? Because obviously we've had a very challenging market environment with most asset classes, and uranium is up about 50%. This is the spot commodity price I'm referring to. It's up about 50% year to date, and that is getting a lot of attention in the marketplace. People are asking, hey, what's going on? What's driving this? In an environment where many other commodity prices are up a little bit, or some commodity prices are down quite significantly. And it's really comes down to a number of very, I think, powerful long-term secular drivers that are playing out in the marketplace. It's really about the growing recognition by governments and the public, I would say, that nuclear power is going to have to play a very important role in achieving net zero targets. It is a very reliable form of energy production that produces no greenhouse gas emissions. So it has a very important role to play in terms of decarbonization of the electricity grid. It has a very important role in terms of energy security. And this is a term that, people haven't been accustomed to hearing about for many decades. But if you go back to the mid-1970s, that's where we learned this term energy security. And that's when OPEC basically implemented its oil embargo against the West and squeezed the price of oil. And that was, I think, a very common or a situation, historical situation, has a lot of parallels to what's happening right now in the world, where commodities have been essentially weaponized for different geopolitical reasons, and prices get squeezed, and consumers and businesses and governments feel the fallout of that. And nuclear power, as I mentioned, it has incredible energy density, and it can provide energy security relative to things like natural gas and oil, which are much more vulnerable to short-term supply shocks and short-term price shocks. And so if you couple this thematic around energy transition and energy security, it's really shining a very positive light back on nuclear energy. And at the end of the day, uranium is the fuel that will power, all of the different nuclear reactors that are in consideration to be built over the coming decades. So it's a story that we like to sum up as a nuclear revival, and the fuel is a key part of the story, and that's what's attracting investors to this category.
So let's talk a little bit more about this renewed global interest in nuclear power. And here in the US, the Biden administration is pouring billions into the industry, mainly through the Inflation Reduction Act and the Infrastructure Investment and Jobs Act. And as you mentioned, nuclear is a reliable source of carbon-free electricity. But there are many concerns. Like one of the main concerns is the cost of nuclear reactors, because nuclear plants are very expensive to build and they take decades. And these costs are going to rise because of inflation and higher interest rates, particularly. Then there are also concerns about supply of uranium. So I read that Russia and its allies, they control more than half of the global uranium mine supply. And further, Russia accounts for almost 45% of the global market for uranium conversion and enrichment. That is according to Bloomberg. So do you think that nuclear power is set for a renaissance, or what are some of the key challenges that will need to be overcome for nuclear power to make a comeback?
I would say, starting off, what we have found generally with just about any large scale capital intensive project, whether you're trying to build a nuclear power station or whether you're trying to build a new subway line or infrastructure, they're all very expensive today. And part of that is because of inflationary pressures. But more specifically, in the case of nuclear energy, the reason why some of the recent plants that have been built have been so far behind budget and over cost is because we essentially stopped building them. The industry largely built out its capacity in the 1970s and 80s, and then we stopped. And when we stopped building them in the Western countries, we basically lost those supply chains. We lost knowledge, we lost efficiencies, we lost workers. And so when you have 30 years go by, and then you decide to build one of these very complex plants, you realize that the supply chain needs to be rebuilt, the workers and their skills, specialized skills need to be secured and whatnot. But I think what's happening right now is twofold. One, the many countries around the globe have decided that they are no longer going to close the existing capacity that they have. We've seen this in the United States. Places like Illinois and California are two recent examples where power stations were scheduled to close and governments basically reversed their decisions because they acknowledged that there's no way to provide reliable baseload power and decarbonize their grids if they were to proceed with those closures. So I think that is the first wave of this renaissance or revival that we've seen. And it's happening not just in the United States. It's happening in Canada. It's happening in South Korea, Japan, Netherlands, Belgium, France, the United Kingdom. It's really happening around the globe where countries were basically on this path of phasing out their nuclear capacity and quickly flip-flopping because of these two big thematics that I talked about earlier. The second theme is about new capacity additions, and China is really the story there. There are about 434 nuclear reactors operating today. There are over 59 in construction right now. 23 of those are in China alone. And then there's over 100 that are being considered for potential construction in the coming decades. If you sum up all of the reactors that China plans to build, it's about 150. And this is really about China building out its energy systems as the country continues to urbanize. It's about moving away from coal. And that doesn't mean that China is not building more coal-fired power stations, but they want nuclear to represent a greater percentage of their overall energy mix, and that's very positive. And then you have a whole host of countries that are considering nuclear energy for the very first time. Some examples include Poland, who today essentially generates all their electricity on the back of coal-fired power plants. They are actively considering a number of first-time construction of nuclear power stations. And there are a whole other bunch of countries as well that are looking at it for the very first time. So I think if you look at the World Nuclear Association, they recently put out a forecast back in September that shows what they believe with all of these anticipated projects, what it looks like over the next coming decades. And they're basically suggesting that the capacity of nuclear power stations globally could double over the coming decades if all the different planned initiatives actually get constructed. So it's a very, if you break it down in terms of annual percentage, it's about 4%. It grows. They're expecting the industry to grow by about 4%. So it's nice, steady, durable growth in terms of additional capacity. Now, if you look at the supply side of the equation, which is uranium, it's a very different story. The forecast for that looks to be in a very significant deficit. And this is one of the reasons why the price of uranium, not just in 2023, but actually in the last 2.5 years, the price of uranium has more than doubled. And the reason why it is more than doubled is because as this demand forecast gets stronger and stronger, people are also realizing that we have not invested in developing uranium worldwide, as the world in the past turned its back on it. And so you've got this timing mismatch that the world is trying to address right now, meaning you've got this very rosy forecast for increased adoption and deployment of nuclear energy, but we need to make significant investments in order to produce the fuel that will be required. The only way to produce more uranium is through higher prices, which act as an incentive to stimulate more production. And this is starting to happen. And this is a typical relationship you have with all commodity prices. As the commodity price rises, you get a supply response. And we're seeing that play out right now with uranium. The challenge we have with uranium is that we had essentially a lost decade whereby the price collapsed to such uneconomic levels that the industry basically turned off existing producing mines. They stopped development of future mines. They stopped exploring for uranium. And now as the sector comes back to life, there is a real catch-up going on in terms of trying to accelerate the restarts of existing mines, develop new mines, and obviously continue the exploration to meet the longer-term needs of the industry. This is obviously having a very positive benefit on the uranium mining companies because they're turning back on mines that were previously producing. They're being able to raise new capital to progress projects and new builds, which is very critical for the supply chain. And this is, I think, really driving not just the uranium price, but obviously the stock prices, which you mentioned, are up over 40% this year. So we think this trend is not a short-term fad or a short-term spike. We think this is part of a longer-term return to equilibrium, so to speak, in terms of trying to find a balance between supply and demand. And right now, it's really a supply challenge, finding the right supply, enough supply of uranium to meet the future needs of the industry is going to be a tall order to achieve.
Right. Now let's talk about the next generation nuclear reactors. And there's a lot of talk about these small modular reactors, and many companies are working to bring them to market. Microsoft is even looking at these next generation nuclear reactors to power their data centers and AI operations. And then there is some innovation in nuclear fusion as well. In fact, many tech billionaires, including Jeff Bezos and Bill Gates, they are now betting that nuclear fusion, the goal of building these fusion reactors, is now within years of being a reality. So could you please explain to us what these small modular reactors are, and what do you think of nuclear fusion? Is that going to be a possibility anytime soon?
Sure. Well, let's talk about small modular reactors. So the concept is it possible to bring down the overall costs and to help reduce the lead times of, as we talked about earlier, these very large builds, these power stations that are like gigawatt or even more than a gigawatt operating capacity? What if we could build smaller power stations that are perhaps 300 megawatts or even 100 megawatts? And these would be next generation reactors that are basically built in a factory. And so you're not subject to weather conditions, environmental factors. built in a factory and then assembled on site. And they're modular, meaning you could build, multiple small reactors and connect them together to, expand the amount of power generation. There are over 70 different designs in various stages of either regulatory approval or commercialization or deployment. And it's a very exciting time for the industry because I think the industry believes that this could be a meaningful technological advance in terms of advancing nuclear energy on a wider, more global scale. And so we're not at commercial deployment as of yet. There are some designs that have been approved. Some are moving forward. Where I live in Canada, we've put purchase orders in for 4 of the GE Hitachi, that's a joint venture, designed small modular reactor. There are a number of different companies in the US that also have initial regulatory approval. And I think it's really exciting because for a few reasons. One, if they can get the cost structure and the time factor more favorable, I think it improves the overall economics. Second of all, they can be deployed in a much more versatile range of applications. So, most cities need these big power stations. But if you think about a smaller city, mid-sized city, you may not need some of these large-scale plants. These smaller reactors may be perfectly fine to help your city center. So they're more versatile that way. And then finally, there are a lot of different applications for these small modular reactors. It could be everything from producing electricity. It could be producing heat for industrial processes. There's also a group of microreactors that are being worked on. And so think about a microreactor as perhaps being in a remote location, like you're operating a mine in the Northwest Territories of Canada where there is absolutely no infrastructure. Those mines today largely run on diesel generators. The idea is if you could create a microreactor to power that one site, it could be a very low carbon way to provide electricity to that operation. So as I said, there's many different designs and applications that are being contemplated. We're still several years out from real, wide scale deployment, but I think it's fair to say that the first movers are starting to plan for these. The fuel related to these reactors, I'm going to go back to a comment you made earlier about Russia's involvement in the nuclear fuel supply chain. The previous plan prior to the invasion of Ukraine was, believe it or not, Russia was going to supply the world with all the fuel for these small modular reactors. And obviously that's not happening anymore. And I'm pleased to share that the US government through the Department of Energy has started to make arrangements for U.S. suppliers to produce this fuel. So it looks like we're a workaround plan is actually underway, which is very positive because it was one of the things that was potentially going to slow the deployment of this technology. The other interesting application that I think a number of companies are and governments are focused on is basically the conversion of existing coal-fired power stations to small modular reactors. And I think the state of Wyoming is leading the world in this pilot where they actually have a site picked where there's an existing coal-fired power station. And the plan is to basically use that site, use the existing grid infrastructure and transmission lines, basically swap out the coal-fired boiler and swap in a small modular reactor. And this is the plan, and it's still several years away. But the Department of Energy has identified hundreds of potential sites that could do this conversion from coal to small modular reactor. And as I said, we're still a few years out until the first pilot is in place. But I think from a business perspective and obviously the perspective of decarbonizing your grid while keeping high value jobs in place in the local community, it sure makes a lot of sense to us. And it's one of the developments we're going to be watching very, very carefully. On the topic of nuclear fusion, I think it's fair to say the world is very focused on trying to make this technology viable. The world's been working on this for decades. This is not a new technology, and the challenge is, how to get it to a commercial state. We're not there yet. Obviously, there are many high-profile individuals investing in this sector. We don't think fusion is going to make any real large-scale breakthrough anytime soon, unfortunately. And that for the foreseeable future, nuclear fission, which is what we are leveraging today, is going to be the dominant technology. So yes, lots of investment and interest in fusion. If it were developed to a large scale, it would be an absolute game changer in terms of our energy systems. It could largely make the oil and gas business redundant. And so that's the challenge the world is working on, but we're not quite there yet in terms of it being a proven technology, and particularly at scale.
Very interesting. And these are some of the very exciting developments, and we'll be watching them very, very closely in the coming years. Now, let's talk about the broader energy transition theme and the role of critical minerals there. So there are some key metals like copper, nickel, cobalt, lithium. These are the key building blocks for energy transition, and these will be needed in these technologies for deployment of these technologies, solar, wind, batteries, and particularly EVs. So could you talk about energy transition and the role of critical minerals there?
Yeah, it's a very interesting topic, and I think it's a topic that's becoming more understood. And I think that's very important, because the world is realizing that if we want to move to a lower carbon way of life and lower carbon economy, that we have to deploy at an accelerated level different technologies. We think of it in three different ways: energy generation. So how do you produce energy in a cleaner fashion? So I talked a little bit about that, moving away from things like coal to nuclear power, moving to solar, wind, hydroelectric, geothermal. All of those transitions to cleaner energy all are more critical mineral intensive. So we talked a lot about uranium, but if you think about things like solar and wind, those obviously require different minerals. Silver, for example, is very important for solar energy. And things like rare earths are important for permanent magnets within wind turbines. So each technology has different requirements in terms of critical minerals. The second element is around transmission of energy. So if you're going to produce more clean energy and you want to move to a world with greater electrification, which is part of decarbonization, you need to think about copper, because copper is really the workhorse of energy transmission, whether it's transmission lines, it's cabling, it's wiring. We do foresee a very large increase in the demand for copper in the coming decades as we move to higher levels of electrification. And then the last element is around energy storage, and that is really about batteries. The large part of it is around electric vehicles. We believe that there are over 20 countries in the world that have hit a tipping point in terms of their adoption of electric vehicles. And from those tipping points, generally you see an acceleration. What's driving the acceleration to electric vehicles is multifold. One, consumer choice and awareness of the issue. More and more car companies are providing options to consumers. The cost parity between traditional internal combustion engines and electric vehicles has improved remarkably. And I just recently read that certain Tesla models are now cheaper than traditional gasoline engine vehicles. So we're seeing this price parity. Government incentives obviously is helping with that price parity as well. And obviously investments in infrastructure and charging is a key element. China is leading the world in terms of the adoption of electric vehicles. almost 1 in 4 new vehicles in China has some kind of a battery in it. The United States and other Western countries are clearly lagging behind that, but are starting to catch up as infrastructure is built out. So we think it's just going to build. So when you think about a transition, and we're not advocating that the whole world is going to move to 100% EVs, because the reality is there's 1.4 billion vehicles operating right now in the world that are either gasoline powered or diesel. And if you think about the average life expectancy of a vehicle being about 15 years, it's going to take many years for those vehicles to come to end of life. And then for consumers to decide, do I pick an electric vehicle in lieu of a gasoline powered engine? So nobody knows for sure how quickly it's going to happen. The last few years, we've seen growth rates of upwards of 40% per year in terms of new car sales represented by EVs growing at 40%. But we think the trend is clearly up. And so when you think about energy, the energy requirements for these EVs, it really comes down to lithium, which is the common element across every EV battery chemistry. That's your electrolyte. You have things like nickel and cobalt and manganese and graphite. And then there's a whole lot of copper within an EV, within the cabling and different copper foil. And so if you think that the EV trend is going to continue for the next couple of decades, we obviously need a lot more lithium, cobalt, class 1 nickel, things like graphite. And right now, the big challenge is many of those supply chains are actually controlled or dominated by China. Many of the batteries, EV batteries produced today come from China. Many of the processing of those minerals that get produced around the world go to China for intermediate level processing before they go into the batteries. And right now, through the Inflation Reduction Act and different and other different policies that are being announced around the world, there is a huge push right now to diversify away from China, not cut China off, but to diversify away from China so that we're not 100% dependent on them for some of these critical supply chains. And right now, we've seen hundreds of announcements made since the implementation of the Inflation Reduction Act a little over a year ago around capacity that will be built or is planned to be built in the United States related to gigafactories, electric car manufacturing, solar panel manufacturing, etc. It's really kickstarting a massive revival in U.S. manufacturing, which is obviously long overdue. And is expected to create hundreds of thousands of new jobs. So we view this transition as a multi-decade, multi-critical mineral driven thematic that a lot of investors are learning about, because some of these industries, if you think about it, really didn't exist just even 5 years ago. So it's they are new industries, there are new sectors, and they are definitely, I think, becoming much better understood.
Right. A lot of investments will be required in this area. We keep on hearing about warnings of energy metals shortages. So are you concerned that as demand for these metals is going to skyrocket as the world is transitioning to cleaner energy? And there are, of course, supply constraints that you mentioned. Are you concerned that these supply shortages could derail the world's climate goals?
It is one of the key risks in terms of, can we secure the critical resources? Can we build the processing and manufacturing elements? It is a big challenge. It's going to require a significant investment. We have largely turned our backs on mining for the last 10 years. And I think the world is realizing that you just cannot overly rely on 1 or 2 or 3 countries for some of your key minerals. The United States, in particularly, is hugely dependent on many other countries for their sources of key minerals. Some of those are very strategic in nature, everything related to energy, defense systems, and it's becoming I think it's becoming very understood, and it's having a very large impact in terms of green energy and as well as industrial policy, which generally governments don't want to get too involved in with industrial policy. But what these policies are designed to do is to basically share risk. Governments are basically saying, look, we're going to put capital up to incentivize the production of key minerals, to incentivize the construction of industrial capacity so that we can build all of this either in country or across countries that are friendly with us through free trade agreements. And so there's lots of different provisions in the IRA that are creating critical mineral partnerships and alliances around the globe. There are a number of countries working together to meet this challenge. I think one of the biggest challenges is around permitting. If you think about how long it takes to permit a new mine, it can take years. And I think whether it's a new mine or if it's a new energy transmission line, like power lines, I think the world has realized that we need to review how long it takes to permit these projects. That today takes way too long. That obviously adds a lot of time and cost to these projects, which makes them less attractive to investors. So I think there are a lot of initiatives going on right now in terms of these strategic alliances, reviewing the permitting process to expedite this transition. We're going to need a lot of different minerals. The one mineral that I would say is going to see the largest percentage growth is lithium. And that's because lithium, prior to a few years ago, was a very tiny industry. But if the adoption of electric vehicles takes place as most people predict it will, lithium capacity and production is going to have to increase exponentially. Uranium is another one that looks to be to have a very significant supply deficit unless we invest in future production. And even something like copper, which we've been mining for thousands of years, is becoming harder and harder to find new deposits that are large scale. And copper is a very big market today, about $200 billion per year. And we see it growing by at least 50% in order to meet some of these electrification and decarbonization goals. So it's a very daunting task in terms of not just finding the capacity, but finding the capacity in friendly jurisdictions. That's the second part of the geopolitical puzzle.
Right. Now let's talk about some of your ETFs that are poised to benefit from this exponential surge in demand for these critical minerals. So let's start with your uranium ETFs, and then we can talk about other energy transition ETFs. So you offer your most popular ETF is the Sprott Uranium Miners ETF. And this year you launched a junior miners ETF. And you also offer a physically backed uranium ETF that trades in Canada. Please tell us about these uranium ETFs, and then we'll talk about other ETFs.
So uranium is obviously not the easiest thing to invest in. You know, it's kind of a technical topic, and obviously you can't go out and buy physical uranium yourself, given it's the most highly policed and supervised industry in the world for obvious reasons. But, you know, we offer a suite of different funds that allow investors to kind of pick and choose how they want to invest in the thematic, everything from the physical commodity itself to the companies that are producing uranium. So the ticker URNM, that's the Sprott Uranium Mining ETF. It invests in companies that are key producers of uranium. It invests in physical uranium. It invests in the companies that are working on the mines of tomorrow, as well as a number of different earlier stage kind of exploration uranium miners. So it gives you a broad perspective to a basket of companies. I think it helps diversify risk away related to any individual holding. Those have been very popular funds for us, and they've grown very strongly this year. and they've performed incredibly well over the last 3 years or so. They are volatile. They are, investing in mining stocks. They are investing in smaller cap, less liquid companies. So you have to kind of think about how much volatility you're willing to stomach. And each fund is slightly different in terms of its inherent volatility. But those 3 funds have grown very much and performed very nicely. So we're quite happy with those. But the last year or so at Sprott, we've tried to build a suite of different indexes with our partner at NASDAQ to really focus on capturing this opportunity from an upstream perspective. And what that means is that we are trying to focus on the companies that are specifically involved in producing these key critical minerals. And we've basically created a suite of funds that allow you to either pick a certain metal or material, such as uranium or lithium or copper, or if you're not sure about, which one do I pick, we also developed a fund called the Sprott Energy Transition Materials ETF, which basically gives you exposure to a little bit of the whole suite, meaning you get about 25% exposure to uranium companies, you get about 25% exposure to lithium companies, then you get, I think, about 20% to copper companies, and then the balance is focused on rare earths, some nickel companies, some cobalt and manganese and graphite companies. So it gives you kind of a broad spectrum of all the key minerals for energy transition, electric vehicles, etc.
This is a very interesting suite, and I'll also encourage our listeners to visit your website. It is sprottetfs.com. You have a lot of very interesting research, videos, white papers, etc. So anyone who is interested in uranium, nuclear energy, and other energy transition materials, they should definitely visit the website and learn more. John, we'll have to leave it there. But thank you so much for joining us today and for sharing your insights. Really enjoyed the discussion.
Yeah, thank you for having me. And as you said, please go to our website. There are great reports, podcasts. Educate yourself. It's the first step in the journey.
That was John Champaglia of Sprott ETFs. Let's quickly recap some of the ETF tickers. So the Uranium Miners ETF is the most popular ETF in their suite. It is the ticker symbol is URNM. We also talked about the Junior Uranium Miners ETF. This is going to be a little bit more volatile, and the ticker symbol is URNG. GlobalX also offers a Uranium Miners ETF. The ticker symbol there is URA. And we talked about the Energy Transition Materials ETF. The ticker symbol is SETM. And this invests in companies that are poised to benefit from increased investments in critical minerals that will be needed for energy transition. They also offer a lithium miners ETF. The ticker symbol there is LITP. Another interesting ETF that I like is by Invesco, and this holds future contracts that are tied to these EV metals. The ticker symbol is EVMT. And in fact, we have talked about this ETF in one of the earliest podcasts. Thanks for listening. If you like our show, please leave us a rating on iTunes or wherever you get your podcast. Also, make sure to subscribe so that you do not miss any episode. If you have any comments, questions, or suggestions, please email podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.